Video opens with stark, professional graphics. Minimalist background music plays low, rhythmic, and intellectual. Graphics display key statistics. ##I introduction and scope. Visual, a rapid succession of financial graphs. A single, bold statistic flashes on screen. Narrator asterisk a significant percentage of businesses cease operations. The primary cause is often cash flow mismanagement, not market volatility. B-roll, animated graphic showing a failing business graph, then stabilizing. Narrator asterisk many operators confuse operational activity with measurable progress. They mistake mere effort for systemic structure. This represents a fundamental misunderstanding of capital mechanics. B-roll, split screen. Left side shows disorganized, chaotic activity. Right side shows a clean, organized control panel. Narrator asterisk bookkeeping records historical performance. It is a retrospective accounting of transactions. Financial strategy, conversely, models future outcomes. It dictates necessary operational parameters for sustained growth. B-roll, transition from ledger book graphic to a complex, predictive mathematical model. Narrator asterisk the gap between historical record keeping and proactive financial architecture represents a significant source of value erosion. This gap is where capital leaks occur. B-roll, graphic illustrating a leak in a financial pipeline. Narrator asterisk today, we address this gap directly. We move beyond reactive spending patterns. Our objective is to build scalable financial architecture that withstands market cycles. B-roll, title card appears, Financial Strategy Framework. Narrator asterisk our comprehensive framework is built upon 4 distinct, interconnected pillars. First, we will optimize cash velocity. Second, we will deconstruct and rationalize cost structures. Third, we will secure disciplined capital allocation. Finally, we will implement robust, predictive forecasting models. B-roll, graphic listing the 4 pillars sequentially. Narrator asterisk adopting this methodology requires absolute operational discipline. This is not a suggestion. It is a prerequisite for longevity. B-roll, shot of a clock ticking precisely, emphasizing time management. #2. Core value pillar 1, cash flow optimization. Transition, the screen transitions from the title card to a focus on money movement diagrams. The tone remains precise and analytical. Narrator asterisk we begin with pillar 1, cash flow optimization. Cash liquidity is the single most critical operational metric. It is the lifeblood of the enterprise. Our primary focus must be minimizing working capital drag. B-roll, animated graphic showing money flowing smoothly through a system. Narrator asterisk we must scrutinize your days sales outstanding, or DSO. This metric measures the time elapsed between service delivery and payment receipt. A measurable reduction, for example, from 30 days to 15 days, represents a material, immediate improvement. It accelerates working capital back into the operational pool, providing immediate leverage. B-roll, comparison graph showing DSO decreasing sharply over time. Narrator asterisk next, we analyze the inventory turnover ratio. It is crucial to remember that holding physical stock represents a liability, not solely an asset. Excess inventory ties up capital and increases carrying costs. High levels may signal poor demand forecasting or an over-procurement cycle. B-roll, warehouse shelves graphic, with highlighted areas showing excess, stagnant stock. Narrator asterisk furthermore, consider accounts payable strategy. Payment terms are not merely administrative guidelines, they are negotiation points. Payment timing must be strategic. Delay payment when contractually permissible, without compromising necessary vendor relationships. Utilizing the full permissible window maximizes the utilization of external capital. B-roll, graphic illustrating a calendar with payment dates highlighted strategically. Narrator asterisk automation is non-negotiable for efficiency. Implement robust, automated receivables tracking systems. Manual follow-up processes introduce predictable inefficiencies and human error. Systemic tracking ensures minimal lapse in collection cycles. Cash flow optimization, at its core, is fundamentally a sophisticated exercise in timing management. B-roll, graphic illustrating an automated tracking system connecting invoicing to bank accounts. Hashtag 3. Core value pillar 2, profit stacking and cost structure. Transition, the graphics shift dramatically to detailed cost breakdowns, complex pie charts, and margin analysis. Narrator asterisk moving to pillar 2, profit stacking. This pillar demands a forensic examination of your operational expenses. We are not merely cutting costs, we are restructuring the value chain to maximize gross margin. B-roll, graphic showing a detailed cost breakdown, highlighting various expenditure categories. Narrator asterisk every expense must be categorized by its contribution to the core value proposition. We must differentiate between necessary overhead, which sustains the business, and non-essential expenditures, which merely consume capital. B-roll, Venn diagram overlaying necessary and non-essential costs. Narrator asterisk analyze your supply chain expenditures. Often, the greatest opportunity for margin improvement lies in vendor consolidation or the renegotiation of bulk purchasing agreements. A disciplined review of supplier contracts can yield immediate, substantial savings. B-roll, graphic showing multiple vendor logos consolidating into one optimized contract. Narrator asterisk labor costs require particular scrutiny. We must move beyond simply counting hours. Instead, we must analyze labor productivity, the output generated per employee hour. Are specific roles generating disproportionate cost relative to their measurable output? B-roll, bar chart comparing cost versus output for different departments. Narrator asterisk this process of deconstruction is about identifying the systemic inefficiencies that drain profit. It requires the objectivity of a financial auditor, not the emotional attachment of an owner. B-roll, shot of a financial analyst reviewing data on a large screen. Hashtag 4. Core value pillar 3, capital allocation. Transition, the visual shifts to diagrams showing money flowing from a central source to different, optimized destinations. Narrator asterisk having stabilized cash flow and rationalized costs, we proceed to pillar 3, capital allocation. This pillar dictates where every surplus dollar must be deployed. Capital is finite. Allocation must be strategic and measured. B-roll, graphic illustrating a funnel where incoming capital is carefully directed. Narrator asterisk capital allocation is the process of assigning funds to the highest return on investment opportunities. This requires a rigorous prioritization framework. Not all growth opportunities are equal. B-roll, comparison graphic showing various investment options with varying risk-reward profiles. Narrator asterisk we must evaluate potential investments against their required payback period and their risk profile. High-risk ventures should only receive capital if the potential upside significantly outweighs the probability of failure. B-roll, mathematical equation graphic, ROI risk tolerance. Narrator asterisk furthermore, capital should be allocated to infrastructure that enhances systemic efficiency. This includes technological upgrades, process automation, or market expansion into adjacent, validated sectors. These investments build durable competitive advantages. B-roll, visual of modern, streamlined industrial or technological infrastructure. Narrator asterisk discipline in capital deployment means resisting the urge to fund every idea. It means maintaining a disciplined focus on the core competency that generates predictable revenue. B.